Hello, everyone, and welcome back to the Traders Mind Chat live show. We have some great stuff to talk about today, namely top-down analysis, or what I call the basics of market mood. So if you are a newer trader, or if you are someone who would simply like some fresh perspectives on this topic, then you are definitely in the right place. Now, before we get into it, if you would be so kind as to click the like button, drop a comment down below to show your support, and share this out with your community, it will help blast it out to so many more people, and I would greatly appreciate it if you would go ahead and do that. So, thank you. Now, in this live stream, we're going to be talking about the basics of top-down analysis. You'll gain a broad view of how markets move, the importance of a holistic perspective, as well as a taste of what it takes to be among the top 10% of traders who actually beat the market. Now, for everybody that's here, that's joining live, again, I appreciate you. And if you could go ahead, type in to the chat to let me know where you're watching this from. And also, as we're going through this presentation, I have a full slide deck for you guys. Go ahead and jump in with any questions that you have at any point. Now, I'm going to share my screen over here, and I'd like you to indulge me just for a moment here. Now, let me ask you this. What if you saw the market as changing seasons, right? So looking at the market as changing seasons. So seasons have a definitive beginning, middle, and end, right? They transition. A season could be a little bit longer or a little bit shorter than another one. Well, this is basically how markets behave, right? Like markets could be a little bit, trends could be a little bit longer than expected, a little bit shorter than expected, that they transition, right? Like it could be a quick transition, but they do transition from one to another, right? So in a very similar way, markets are like seasons. And just like seasons, the first signs of change are going to be small, right? Like you see the first signs of change as being in these these leaves, right? But then as the signs of change increase, you start to see them get bigger, and eventually the signs of change become blatantly obvious to everybody. Now, but what you do need is you need each of these signs to tell you when the seasons are changing. Because if you just pick up a leaf off the ground, you might say, "Uh-oh, winter's coming," and meanwhile, you're right in the middle of spring, or right in the middle of summer. Maybe it's just one random leaf that happened to fall on the ground. You don't know. So it is important to have this bigger approach where you're looking at the forest, the trees, and the leaves. Now, the way that I like to think of it is like this. I like to think of the markets as the different time frames, and I like to think of them as the monthly time frame being the forest, the weekly time frame being the leaves, and the daily time frames being those individual leaves. Now, to take this one step further, right? We've got the indexes, right? We've got the general market indexes. Well, we have the five major ones, right? We've got the S&P 500, the Nasdaq, the Russell 2000, the New York Stock Exchange, and the Dow. Those indexes are kind of like regions. Now indulge me for a moment. If you were to think of your seasons not as like the summer, the spring, summer, autumn, and winter. But what if you saw the seasons as trends that move up, down, or sideways? What if you saw them that way? What if you saw seasons as a series of higher highs and higher lows, and you saw uh, the downtrends as a series of lower highs and lower lows, and you also saw sideways trends as just a series of lower highs and higher lows, or just this choppiness that kind of goes nowhere. And you saw the market like this, right? Well, where let's say you have all these different regions, right? And this is, I know that we're a huge international community, but uh, just for the sake of this example, take a look at the U.S. Right, like what if the seasons, right, in the U.S. that you do experience all the seasons, but well, what if it was broken out like this, where you have the S&P 500 up over here, right, and then you have the Nasdaq, you have the Russell 2000, you have the New York Stock Exchange, you have the Dow. They're all there, right? They're all affecting one another. They're all going to experience the same types of seasons, right? You have the five regions. Each of them have the same types of seasons, right? They're moving up, they're moving down, they're moving sideways. Each season can kind of start and end early sometimes. Sometimes it might start a little bit late. But the bigger changes are all going to happen together, right? Just like the regular seasons, just like how in New York, right now we're starting to experience autumn, and some of the parts of the country might be a little bit colder, some might be a little bit warmer, but the whole country is transitioning. That's what happens with the market. That's what happens with the market. Like earlier this year, you started to see the S&P 500 start to break out a little bit. It was choppy. Same deal with the Nasdaq. Um, the Russell was moving sideways for a long period of time. And then what happened? Right, just over the past couple of weeks, the Russell finally breaks out of its range that it's been in for a very long time, and with it, you finally had the bigger move happening. That's why looking at the market like this could be so helpful. Looking at each region can help you see the bigger picture, and vice versa. So, does that make sense that the seasons and the regions are all part of a larger whole? And if that is the case, wouldn't you look at all the pieces before drawing a conclusion? It kind of makes sense, right? So, congratulations, you have the first piece of the philosophy to understanding market mood. Now, I'd like to transition this over and share with you uh, some of the current market. And first off, too, let me know if you guys have any questions about anything that's been said so far, or about anything related to market mood, or uh, yeah, let me know what questions you have. Go ahead, type them into the chat. Now, uh, to show you a point that I had earlier, when we were looking at this, like this is that you have the five major indices. I also have another ETF that I like to look at. This is an ETF of the IBD 50. Basically, it tracks growth stocks, like your more innovative companies, and so your newer innovative companies. And so uh, with the five major indices, right? Like, so you're looking at the S&P 500 up here, you're looking at the Nasdaq, the Russell 2000, the New York Stock Exchange, and the Dow over here. And these are all monthly charts, by the way. You could see too, right? Like, let me bring this one down just a little bit so you don't have that other spot in the way. And Actually, make that a little bit bigger. It's a new feature here in StreamYard, which is pretty cool. Move my face down to the corner anyway. You could see how this over here, the Russell 2000, how it was moving sideways for a while, and you did have the S&P 500 starting to move up, and then it started to find resistance, and then it rallied, and you had the Nasdaq over here, right? That was chopping sideways for a bit, and what was happening with the Russell? The Russell was moving sideways. The NYSE was moving sideways. The Dow too. All of it moving sideways, and all of it struggling. Why? Because the 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 different regions are, they kind of affect one another, right? Like well, what we were talking about earlier, how the with the different seasons and how the seasons change, and uh, some areas might experience seasons a little bit differently than some of the other ones. Now, well, when you're looking at this over here with the Russell, and the Russell finally starts to break out, right? Zoom in a little bit on this, it finally starts to break out, and then what happens? You have all of them, right? All the indexes all together now moving, and resuming their uptrends. It makes it, well, when everything is flowing together, uh, it uh, it makes for a smoother, easier transition. And this too, by the way, it it really is as simple as this. Right? Like you don't need to be tuning into the news. You don't need like none of us really none of us need to tune into the news or listen to other people's opinions. What you're seeing here is everyone's action, right? Like the collective action of everybody that is participating in the market. And you could just simply observe, just like how you would look out your window to see what season it is. You could look at these charts and see, well, how are the indices moving, and well, what does the forest look like from this perspective here on the monthly time frames? What does the individual trees look like? And that's starting to drill down further into the daily time frames. And then finally, on the daily time frames, that's where you're starting to see the individual leaves and how things are beginning to change, right? There's a bunch of other indicators on these charts now. If you know what they are, if you've been to a couple of these, fantastic. If not, then don't worry about them just yet at this point. Well, happy to answer questions about them, but at the same time, um, yeah, well, like don't worry too much about those indicators. Well, what's more important is these bars, right? Those orange and gray bars. You could start to see like how over here, right, on this index, the S&P 500, and how on the Russell, like yes, it broke out, but are they starting to top out just a little bit? They ran pretty far. They're starting to make a little bit of a turn, right? Maybe, but we don't want to just look at just this one time frame. It would be the same thing as what we were talking about before with this, right? Back here. Yeah, you don't want to be this guy that picks up a leaf off the ground and says, "Uh-oh, winter's coming early," and meanwhile you're in the middle of spring. Right? Yeah, well, we want to take everything in context all the time. Always take everything in context and never get caught up in the minutia. One of the most important things. Um, so coming from BTO, appreciate you being here, man. Thanks so much. Yeah, as you guys have questions, please go ahead, type them into the chat. Let me know. Let me know what questions that you have. All right, so back to this. So we're starting to see, yeah, maybe the indices are coming back in a little bit. Maybe the indices are extended, but when you compare it to the weekly time frames, and you start to say, "Oh well, you know what? This bar here, right? This last bar, it's Tuesday. We still have 3 more days and about 2 hours to go to complete this bar. Anything can happen in that time period." And you pop out over here to monthly, and you're like, "Well, you know what? We're still at all-time highs. We're still in a solid uptrend. Maybe we're in this scenario where it's just a leaf on the ground, right? Well, we really need to see the transition across the board to say definitively, yeah, you know what? Um, Winter is coming or fall is coming. Maybe it's time to harvest." Actually, in some of my the positions that I have, a number of them have started to get a little bit extended, and so I've started to do a little bit of harvesting, right? And this is another concept too that you might want to look into, which is when you when you're when your stocks, well, when they're producing fruit, right? Well, when just to keep with all these uh yeah, with these forest type of analogies, well, when your stocks are producing fruit, for example, show you one of the positions that I have on, um this one here today, WSC. Now this one this morning gapped up to a fresh all-time high, right? Wasn't expecting to see a gap up this morning, but it gapped up. That would be the equivalent of you're planting your stock garden. It's finally starting to produce fruit. It's producing a lot of fruits. Many of them are, and you say, you know what? Let me go over here and grab an apple, or let me snip a rose and put it on the table, because you know why? You need to have just a little bit of that taste, especially when price is starting to get extended like this. Even if you are planning to hold for a little bit longer, that's okay. When you sell a little bit as price is moving up, then it's one of those things that allows you uh, to hold for a little bit longer. It's something that I've done personally. It's something that so many others have made it into a practice. So many professional traders of selling at least a little bit into strength as you go. It's a great habit to develop. So, with all that said, I'd like to open it up to some Q&A. Open Q&A. Whatever questions that you guys have, go ahead, type it into the chat. Let me know what kind of questions do you have. It could be related to the topics that we've discussed about the very basics of market mood, anything that we've discussed in any of these slides, or it could be uh, something unrelated, something that you have on your mind. Go ahead, type it into the chat. Let me know what you are thinking. You know what, too? A lot of this stuff also applies to crypto. So much of, well, what I've learned trading stocks over the past 20 some odd years, I've taken that and have directly applied that to crypto, and it's been phenomenal to say the least. Like, uh, for example, like all the same types of patterns, right? If you didn't know, like if you couldn't see that ticker price right up there, actually, why don't I do it this way? If you couldn't see the ticker right there, you wouldn't know that this is Bitcoin. Or if you couldn't see this over here, you wouldn't know that it's Bitcoin. It all trades the same. It's all just price and volume. It's all supply and demand. Question from BTO. How long did it take you to be profitable and how did you overcome any barriers? Thank you. Yeah, so great question, BTO. I'll tell you, I made pretty much every mistake that I think that somebody can make. I don't want to press that too much because I'm sure that there's plenty of other mistakes out there and a few that maybe I'll need to relearn again. But yeah, my journey has been was very challenging. It took me 10 years to finally gain any level of consistency and profitability. Yeah, like I had some good trades before then, but I was the guy that would go through these boom and bust cycles. And part of the reason for that, too, BTO, was that I approached the market without knowing what I was doing. Like, well, when I first started trading, my philosophy was you have some money, you put it in, you wait X amount of time and more money magically pops out the other end, and there's not much more that's needed other than that. And I learned the very hard way that that's not the case. And my first entry into the market was in 1999. So let me show you what the market looked like back then. Right, we'll take a look at the Nasdaq. 99. This is what the market was doing when I first entered. And you might be like, wow, that's fantastic. You entered at a great time. The Nasdaq's up about 100%. I did not make that much in my account. In fact, when I first started out, I just went to my local bank. I didn't even know where to go buy a stock back at that time. So I went to my local bank and I told them, "Hey, I want to buy some stocks." They're like, "Whoa, kid, you don't want to do that. Well, you want of these?" And they show me their mutual funds, and eventually they get me to buy into three of their funds. I put my money in, and after a couple of months, I go and I check my account, and the account's up 10%. And I'm like, geez, I'm a freaking genius for doing this, right? And at the same time, I'm going to college. I just started my bachelor's, and then my studies start to get a little bit more rigorous as I'm into my sophomore year, and it's just like, okay, you know what? I've got time on my side. I have the professionals managing my money for me. I don't need to look at this. So I finally graduate, and I graduate in June of 2002. And this is June of 2002 down here. I'm thinking, wow, I'm going to buy a car with this money. I should at least have enough for a nice down payment. But I go back to my account and I didn't have the money that I started with. In fact, I had significantly less than what I had started with. And I'm looking at this and I'm just like, what in the hell happened? Time on my side, professionals managing my money for me. Screw this. See you later. So yeah, the Jarek's writing in money plus time equals more money. No, that turned out to not be the case. It's a little bit more complex than that. So some of the barriers then, BTO, were to get over some of my limiting beliefs about trading and about money, and to even gain some level of awareness of them at all, right? Like money in plus time equals money out. Yeah, that didn't work, and learning a lot of things the hard way. Um, that first experience had me very skeptical, and I didn't want to trust anybody. So that's partially what led me on this path of trying to do everything myself. And that led to a lot of failure and heartbreak because, like, yeah, I was reading books and, watching some shows like CNBC, Fox Business, Kramer, like those types, trying to learn and trying to read books and things like that. But I didn't want to trust other people that said that they've traded, that they know what they're doing, because you know uh, I put those people in the bucket of professionals, and uh, without realizing it, had this huge mistrust for professionals because of what happened with the mutual funds and the banks and so-called professionals managing my money for me. It wasn't until 10 years in that I finally found uh, this book, How to Make Money in Stocks by William O'Neill. That one made a lot of sense to me. And then I found meetup groups, all these meetup groups around the country, around the U.S. For people similar to myself that just were going and discussing the general philosophy of it. So I got there, started listening to other people's perspectives. And then once I had a community around me, that's what helped me to really start to gain my footing. And within a year, was consistently profitable. And after that, became a leader in the group, started to give talks around the country, presented uh, at this thing called Stocktoberfest in California. That was cool. Built a couple of businesses around it. Started to really build that war chest, that proverbial fu money, and just kept on growing and growing and growing. And then a few years ago, decided to pack it in at the day job at the age of 38, and here I am now. Uh, Doing this full time and doing my best to help other people learn how to do this on their own. Yeah, you don't need somebody to tell you what to buy and what to sell or anything, but it is very helpful to have people around you that are on a similar path that you could talk to. It's really one of the things that transformed my journey from being that boom bust guy into finally getting consistency and being able to do this. BTO also says, all traders talk about edge. How did you find your edge after doing everything you're talking about? Another great question. Keep them coming, man. Your questions are great. So, uh, edge. So, well, what helped me find my edge was I had mentioned that I read a whole bunch of books, right? Um, I read a whole bunch of books, and then finally finding something that really resonated with me, right? Like so, in the beginning, like fundamental analysis, so it was just like, oh, okay, I'll try this. Then like, basically, it's almost like going to Baskin Robbins or some kind of ice cream shop, right? Like the way to figure out which flavors you like is to just sample some of them, right? And so if you are very early in your trading career, yeah, like try to sample a few of them. That's what worked for me, and then eventually finding the can slim methodology, right? And then it's just like, oh wow, well, look at this. And so when I got the book, I tried, and this is a common mistake, right? So please learn from this mistake. My mistake was trying to do everything to the letter, or maybe that's good in the beginning to try to behave is as the person that wrote the book, right? So to try to just model their success to the letter. But well, what eventually happens is that we need to customize. We need to figure out what parts of it work for us, what parts don't. Maybe start to read other things, try to get some other perspectives, and then you're starting to take a little bit from over here, a little bit from over there, a little bit from over there, and then you're coming up with your own thing. That's a process that really works. So and this is a continuous process too. Like I've been trading for, yeah, I think it's 24 years now. The process isn't done. Right? Like talk to me in another year, in another 5 years. Me 5 years from now should be able to kick this guy's ass. Right? Like that's just kind of how the game goes. So we continuously evolve. If like if that's what you aim to do, but I think that that's one of the great things about this game is that there really is no 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 ceiling, right? Like you could keep on getting better and better and better as you go, and that's one of my objectives with this. So yeah, that I'd say that that's how you go about finding your edge. You taste a bunch of different styles. You see which one fits you best, fits your goals best, fits your objectives, fits your ability to execute, and then you start to go deeper onto those. Yeah, for me, like, well, with Ken Slim, it was great. Another book uh, that really helped me do it better was this book, How I Made $2 Million in the Stock Market by Nicholas Darvis. Doesn't sound like a huge amount of money, but the guy did this back in the 50s. So back then it was uh, definitely a lot more than it is now. And yeah, he was trading part-time nights and weekends before there was computers, just writing charts out by hand, right? There were no charts then, just plotted it on graph paper, and that's how he did it. And that was a huge inspiration that, wow, this guy is able to trade part-time nights and weekends, not his full-time thing, but was able to do extremely well. So can I. And then I started learning some from him, learning some from O'Neill. Then I started learning some from other people in that meetup group, and then I came up with like my own version of it. Right, like it's kind of like going to the store, you get a suit off the rack, or you could get something that's custom fitted, or you get that suit off the rack, and then you get it tailored for yourself. That's kind of what this is. So let's see. Uh, Question from Jarek: Have you stopped trying other flavors of trading? Um, not, not quite. Like it's all kind of like so let's say to keep up with this analogy, if my favorite flavor is chocolate, right? And I've like, wow, chocolate is the best. Well, now I'm starting to try different flavors of chocolate, right? Like so, like maybe there's Dutch chocolate, there's dark chocolate, white chocolate. There's chocolate that's made by this ice creamery over here. Well, how is it across the street? Right? Like, how are they different? What's it like in Italy versus over here in New York versus somewhere else in the country? Right? Like, so it's uh, going deeper and deeper into that rabbit hole, and that's how I've taken so much from different people, and yeah, I'm still getting better. And when you're with a group, right? And so this is part of what the magic of what took me from being inconsistent to getting a group and then finally getting consistency and continuously building on it is that yeah, when you're in a great group, iron sharpens iron, right? So uh where as you're bouncing ideas off of other people, they're giving ideas, and you're starting to you're all growing together. You're all gaining different ideas and perspectives together. You're challenging each other to grow more, and it really is a beautiful thing. Community is very important when it comes to trading, and so yeah, if you're not already a part of the trading community, I would encourage you to do so, and to also be mindful of the different communities out there, right? Like, so I would suggest to find a style that you like, see what communities out there you could find, go out, try a few of them, right? You'll probably have to pay to get into some of the communities. That's fine. Think of it as an investment in yourself. Go there, try it out. If it works, stick around. If not, then move on to the next one, and so on and so forth. Any other questions? Any other questions here? We're at about the half an hour mark. All right. Well, let me know what you guys thought of this. I'm going to be doing a basics training for the next several weeks throughout the rest of the year. On It'll be on Tuesdays, like a dedicated thing. So every Tuesday will be basics of trading. Today we did general philosophy of top-down analysis. Next week, well, what are we talking about next week? Next week, I think that we are talking about. I think we're talking about price action. Yeah, I think we're talking about price action. Don't quote me on that, but that's what I think we're talking about. Um, Anyhow, let's see. Oh, one more question from BTO here. Oops, well, where'd the question go? Last question. Did you have any mentors? And if you did, what made you select them? And if possible, can we know who mentored you? Thank you. So many of them are like aspirational mentors. And so learning from books, but it was really like, well, when you say mentor, if you mean like somebody sitting there with me and guiding me in that way, no, I didn't have that part. And all honestly, like it would have made things go dramatically faster. And if I could go back and advise my younger self, that would be my one piece of advice. And the the barrier to my younger self would have been that, oh well, like I don't have that much money, and I'm trying to build this up. And my advice would be that yes, it's going to cost a little bit, but it's going to cost you so much more in time by not doing it. So take this small investment in yourself, become that much better, that much quicker, and you'll be able to start to see your profits grow that much faster. But yeah, the closest would have been the people in that group, and aspirational mentors, people like William O'Neill, people like Nicholas Darvis, people like Mark Minervini, people like Mark Douglas, Van Tharp, so many great authors. Reading their stuff, signing up for some of the courses, learning that way. Um, but yeah, well, like as far as somebody like sitting down with me, didn't have that. This is probably the closest thing, right? Well, like live stream, hopping on here, getting to ask questions this way. It's pretty good. Um, yeah, BTO. It's my absolute pleasure to be on here and do these, and so we'll call it a day here. I'd like to say thank you all so much for being here with me today. Again, if you have any questions on anything at all, drop it down in the comments. I read all of the comments. And yeah, you know what? Go to marawealth.com. I should have had my screen share up, but anyway, go to marawealth.com. There's a brand new course that's on there. The course is free. The course is about building your mindset of steel. That's a super important topic for you guys to really drill into. Mindset is so much in this game. Go get that course. Again, it's free. And I'll see you back here tomorrow. All right, everybody. Take care. Much love. Peace out. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.